Heya Cryptozens, tonight's show. Terra 2.0 lives? Buterin's algorithmic stablecoin thoughts. It's 10 p.m. Pacific time. The date is May 28th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nicodemus. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you have the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Weeks of speculation are over. Planning, anticipation, expectation, arguing, voting, everything. It's all over. Terra 2.0 is here. At approximately 8 a.m. UTC today, Do Kwon and Terraform Labs did it again. They launched their new blockchain. Terra becomes Terra Classic and Luna becomes Luna Classic, thereby making way for Terra and Luna to live on in a new blockchain. A new blockchain that doesn't have the difficulties of balancing out an algorithmic stablecoin, but a blockchain that doesn't have the benefits of a trick stablecoin. A new blockchain with an entire ecosystem ready to go, but a new blockchain with some of the same connotations of the old blockchain. And so it came to pass that at 8 a.m. UTC, or around 11 p.m. Pacific time, Phoenix 1, that's what they renamed the Terra 2.0 mainnet, Phoenix 1 went live today and started chunking out blocks. Now, reportedly, in case you haven't looked recently, all the public node services, Wallet Explorers, they're all online. Kwon said users should be able to see their newly listed Luna token balances. His tweet said, quote, "To view your Luna, or Luna 2 as some exchanges call them, token balances, you only need to log into Station and refresh the page." Now, if you're an investor that's migrating over to the Inter-Blockchain Communication Protocol, or IBC, you're going to have to create a Station wallet with the same ledger, and then follow the instructions that they give you when you start making your wallet. He also sent out a link, and this is to the official portal where you can check your Terra wallet balances. The address is finder.terra.money. Just put that in your address bar, press enter, and you'll go right to it. And from there, you put in the block number or the transaction number or the account number, and they'll show you your balances. That said, you might not be ready to go look quite yet. That's because hours after the first block was minted, prices have dropped by up to 88%. Looking at the charts here on CoinMarketCap, it looks like they opened around $17, almost $18 each, and then it dipped immediately and shot up to almost $20. And then it started falling. And Bybit, crazy Bybit, they had Luna opening at $30 each. Now on Bybit, that's where it dropped 88% to $350, and then bounced back up to around $6. And frankly, its descent looks a lot like the Black Swan event of its predecessor. And that's got people nervous. Looking at that degree of volatility has led Binance to announce on their website that it's going to delay listing Luna USDT and Luna BUSD pairs until the 31st at 6 a.m. UTC. And it's only going to be listed in their innovation zone. The innovation zone is it's a dedicated training zone. It's a place where users can check out some new tokens that are known to have increased volatility, and as such, they might be a higher risk to other tokens. Even then, before a trader can access the innovation zone, you have to go to the web version of the innovation zone's trading page. It's a whole thing. And I've noticed that while a lot of the big players have said that they're going to be working with Terra Labs and listing 2.0, but a lot of them haven't done it yet. A lot of them still haven't listed the new token at all. I expect the big players, at least in the US, are going to kind of sit back and see how things go. Now, Binance, they have already taken a decision to delay the listing. Now, here's one of the upcoming issues as I see it. A lot of people might not have gotten their airdrop yet. With all this selling pressure on the market, those tokens may get sold just as soon as they possibly can. Now, according to folks at CoinMarketCap, At the time of writing, Luna is trading at about $4.98 each. That's down 73.78% from its high on the day. It has a market cap of just a bit over $1 billion. Fully diluted market cap of $4.9 billion. $287 million in volume trading in the first 19 hours of its existence. Now, all of this is occurring as a new report comes out. And this new report by Nansen says that UST was depegged because of the activity of 7 whale wallets in the Terra ecosystem. What they're saying is that by looking at the on-chain data from May 7th to May 11th, Nansen determined that this all started because 7 wallets pulled their UST from Anchor. They bridged that to Ethereum using Wormhole to make the bridge, and then they swapped their newly bridged UST for other stablecoins in Curve's liquidity pool. And because of low liquidity, the swaps to other stablecoins triggered UST to depeg. So, once UST started losing its peg, they started exploiting arbitraging inefficiencies between Curve decentralized exchanges and centralized exchanges. It's not a hack. It's not an exploit in any way. In fact, arbitrage was a big part of how UST kept its peg originally. So this really pokes holes, huge holes, in the idea that Luna was taken down by a hacker, or even a group of hackers. We're talking about massive amounts of money being moved around here. The smallest of the transfers were around $10.5 million. The largest was $175 million that got bridged out of Terra to Ethereum. These are volumes that hackers generally don't have to play with. It looks like some folks with deep investment in Anchor, they got worried that their 20% APR wasn't going to happen. So they withdrew their money and invested in other places. And they took advantage of arbitrage to make a little profit. In their concluding remarks, Nansen said, quote, "This on-chain study refutes the narrative one attacker or hacker working to destabilize UST. Instead, we found a small number of players identified and arbitraged vulnerabilities specifically in relation to the shallow liquidity of the Curve pools securing UST's peg to other stablecoins." So, here we are. Terra 2.0 lives. Let's see how she goes. Let's take a look at the markets. At the time of writing, the global crypto market cap is $1.2 trillion. That is a very slight increase from $1.19 trillion yesterday. It's up 0.89% in 24. The top 5 cryptos by market cap are Bitcoin up 0.91%, Ethereum up 2.45%, Tether, USDC, and Binance Coin up 1.3%. The global NFT market cap is looking a little better. It's up over 11.42 billion. Sales volume is down 2.59% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Goblin Town, followed by Bored Apes, Otherdeed, Boki, and Mutant Apes. Keep in mind, some of these collections have very volatile prices, so do your own research. So, right now, a whole lot of people are down on just the very idea of algorithmic stablecoins. There's always been people who never bought into the idea of a stablecoin that's not backed by an asset. Now, recently, we've seen at least 4 stablecoins depeg: Tether, USDN, UST, and DAY. One of these stablecoins is backed by assets. The others are not. And I don't think it's any coincidence that the one stablecoin that is backed by assets and not an algorithm is the one that regained its peg. USDN, or Neutrino Dollar, is part of the Waves ecosystem. Last April, they lost their peg. They dropped 15% amid accusations of price manipulation on the part of the Waves team. And I think we're all familiar with what happened to UST. Shortly after Terra USD exploded, so did DAY. Now, they were all algorithmic stablecoins, and compared to Tether, they failed spectacularly. Neutrino has made it back up to 97 cents each. While that's an improvement, it's still not $1. DAY, they have not regained their peg, sitting at 67 cents. And Terra USD I guess it's being called something else now, Terra Classic USD or USTC. It's closer to being a stable coin for a penny than for a dollar. It's sitting at around 2 cents. So this performance history is enough to turn some people off from algorithmic stablecoins. They seem risky. Vitalik Buterin seems to have potentially a different perspective. He said, quote, "What we need is not stablecoin boosterism or stablecoin doomerism, but rather a return to principles-based thinking." So he put together a couple of thought experiments to consider whether or not an algorithm stablecoin was even possible to sustain long term. I mean, UST worked great until it didn't. Long-term usage is a key performance indicator. He said, quote, "While there are plenty of automated stablecoin designs that are fundamentally flawed and doomed to collapse eventually, and plenty more that can survive theoretically but are highly risky, there are also many stablecoins that are highly robust in theory and have survived extreme tests of crypto market conditions in practice." So, he was considering Reflexer's RAI or Ray stablecoin. It's an Ethereum collateralized stablecoin. It's not pegged to a fiat currency. And there are a number of things about it. It uses an algorithm to automatically set the interest rate, and this proportionally opposes price movements and incentivizes users to return Ray to its target range. Buterin said, quote, "It exemplifies the pure ideal type of a collateralized automatic stablecoin." He said the way it's structured, it gives users a chance to get their liquidity out in Ethereum if things start to go south. So, according to Vitalik, here are the things to consider when determining whether a algorithm stablecoin is, in Vitalik's words, truly a stable one. First, can the stablecoin wind down to 0 users? In his view, even if market activity of a stablecoin drops to nothing, people should be able to get a fair value out in terms of liquidity. He said UST fails. It doesn't work because it requires Luna to maintain its prices. He calls that a volume coin or vol coin. And if things go bad to the vol coin's value, bad things happen all over the place. It really affects the value of the stablecoin. He said, quote, "First the vol coin price drops. Then the stablecoin starts to shake. The system attempts to shore up stablecoin demand by issuing more vol coins." That's exactly what happened with Luna. With confidence in the system low, there are few buyers, so vol coin price drops rapidly. Finally, once the vol coin price is near 0, the stablecoin too collapses. So it's his opinion that because RAI is backed by ETH, it's not subject to a negative feedback loop between the two, and Ray users can still get their value out in ETH. Second, negative interest rates option is required. According to his thesis, it's important for an algorithmic stablecoin to be able to put in a negative interest rate when it's tracking, quote, "a basket of assets, a consumer price index, or some arbitrarily complex formula that grows by 20% per year." He continued, "Obviously, there are no genuine investments that can get anywhere close to 20% returns per year. And there is definitely no genuine investment that can keep increasing its return by 4% per year forever. But what happens if you try?" If that happens, there's only 2 possible results. Either the project puts in a negative interest rate on holders, and this would end up canceling out the USD denominated growth built into the index, or it turns into a Ponzi, giving stablecoin holders amazing returns for some time until one day it collapses with a bang. Now, don't go thinking Vitalik's saying just because it meets these 2 criteria, it's safe. He said, quote, "It could still be vulnerable for other reasons. Example, insufficient collateral ratios, or have bugs, or governance vulnerabilities, but steady state and extreme case soundness should always be one of the first things that we check for." And that's going to do it for us tonight. Thank you so much for joining us. If you enjoyed tonight's show, like, comment, and subscribe. Give us a glowing review, because that helps other people find their way to this podcast. We're here each and every night at 10 p.m., bringing you the crypto news analysis that you need to start your day. You can find us on podcasting platforms everywhere or on YouTube. Do you have questions or comments? Reach out and let us know. The address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. We'll see you tomorrow night.